Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you and a very happy Thursday. In today's program, I want to talk about more recession talk because that's all we seem to be hearing at the moment is all talk about recession in 2023 and all that. Plus, it's that time of year where a number of big investment banks share their slightly quirky and maybe crazy predictions for 2023. So I'll share that with you as well. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So yesterday I spoke about a number of big investment banks who are doing layoffs and also talking about recession, but we have more recession talk again, more recession. Basically, here comes the recession. That's what they're sort of basically saying. According to Morgan Stanley, their chief economists, they believe the global economy is likely to grow so slowly in 2023 due to the number of interest rate hikes we've had by the central banks to fight inflation, that even though technically we might not be in a recession, it will certainly feel like a recession. Now, Morgan Stanley's Seth Carpenter, he says, in his own words, the global economy is slowing and the risks are to the downside. We are on the cusp of a loose definition of recession. He goes on to say as well, the distinction between a recession and not is going to be a little murky. Okay, all right. So basically he's saying that even though technically the US might not technically be in a recession, it's going to feel like one. He also goes on to say, okay, that global GDP growth will basically just whimper in growth by 2.2% next year. US GDP growth will be really minimal at 0.5%. And Eurozone GDP will decline by 0.2%. As well as that, if he's right, this will be sort of music to the Fed's ears. As well as that, job growth in the US will fall to 100,000 a month from 200,000 a month in 2022. As you know, and we've done quite a few watch-alongs with the non-farm payroll, the number has been very positive or very good for new jobs created. It's been around the 200,000 barrier for quite a while. In fact, the last number came in at 263 versus 200,000. And like I've said before in my watch-along, and in previous videos, this is not good news for the Fed because they want to start seeing the labor market decline. So if this chap is right, then 100,000 a month means the Fed is making progress with their fight against inflation. Now, Morgan Stanley obviously is not the only one. Obviously, Morgan Stanley's Michael Wilson has said the same thing, that he expects the market in 2023, at the beginning, quarter one, to come under a lot of pressure. But other banks are jumping on the bandwagon, Goldman Sachs as well. No, or basically the overall sentiment is they think recession is without a doubt on its way come next year. But Citibank also expects this as well. Citibank also, they expect the Eurozone and the UK to enter recession by the end of the year. The UK, I think, is already there. And the US to join the recession club by mid-2023. So again, a lot of hard word talk. We've been talking about this a lot. And then get the end of the year where people obviously are looking at the bigger picture. And like I say, this is why the market is fairly sideways. We'll look at the markets in a moment, where everything is trading at the moment. But like I say, the idea of a Fed pivot has disappeared. So the reality of recession is hitting in, and everybody believes that is just a matter of time. But anyway, like I said at the beginning of the video, this is the time of the year. What tends to happen is a lot of investment banks and other, analysts, and I will do my own as well, come the end of the year, do these sort of crazy, maybe mad predictions of what they think could be black swan events happening in the market in 2023. Now, don't forget, last week or the last couple of episodes, I did one on what Standard Chartered predicts will happen potentially next year, which could catch the market by surprise. Today, I come along Sasso Bank, actually, and they're sort of quite, interesting black swan predictions. I don't think black swan events or events which cannot be predicted and happen and cause a lot of turmoil to the market, or nobody predicts at the time before it happens. And it causes a lot of volatility and a lot of sort of uncertainty in the market. But here is the some black swans. They did quite a couple, but I picked a handful of them, which I think is a bit more interesting to read. One was a country banning all meat production, or meat produce, which I did want to include on this list. But these are more economically based. Anyway, number one, their crazy black swan prediction is French President Emmanuel Macron to resign, causing uncertainty in the Eurozone. Now, they went on to say that they think that obviously with the rise in power of Le Pen and other uncertainties, certainly the slowdown in economic growth in France, that Macron will be forced to resign, and this would cause an awful lot of uncertainty in the Eurozone. Don't forget, Macron is a key Eurozone supporter, EU supporter. Le Pen, on the other hand, I'm not saying that she would literally take over, but Le Pen is anti-EU. So with Macron being forced to resign, that will cause a lot of uncertainty. And it would be certainly an event which would cause a lot of chaos, certainly for the single currency. Number two, which is one I quite like, obviously, because I'm a gold bug, as those who watch my video regularly knows. I'm a gold trader. Number two, gold soars to $3,000 an ounce after central banks fail to control inflation. Now, don't forget, don't forget, all this year we've been talking about the central bank's fight against inflation and their aggressive tightening cycle, especially the Fed have been very aggressive, 475 basis point hikes. But Bank of England, ECB, Reserve Bank of Australia, Bank of Canada as well, they raised their interest rates by 50 basis points yesterday, all fighting inflation. And bear in mind, it's been throughout the year they've been doing this. Inflation is not coming down. It's not coming down. And gold is ideally used as a hedge against inflation. But it obviously hasn't played that role this year because of higher interest rates, makes gold as a physical asset less attractive to investors. As well as that, with higher interest rates in the US, is actually increased bond yields as well, which again is tempted more investors away from the yellow metal onto that. However, if we keep seeing failed attempts to bring down inflation, then quite possibly gold will then get that sort of attraction as a hedge against inflation again. $3,000 next year, I can see slightly unlikely, unless we have potentially a major conflict. Obviously we've got a major conflict at the moment, but more sort of uncertainty in that and the global events. But as well as that, I can see gold obviously benefiting with recession concerns as well. So yeah, maybe $3,000 in my opinion. I would love to see it go there. I don't think it will. I think maybe around the 2,000 mark again. Certainly we will test eventually at some point, maybe next year. The other mad prediction they put as well, EU to create its own armed forces. That has been talked about before, obviously, because US is, still probably is the biggest member of NATO, is the most active member of NATO, but they're taking more of a back seat. Okay, so there is talk about EU doing its own sort of armed forces, combined armed forces like NATO. And what would that mean to NATO, obviously, and obviously the repercussions of that, which again, like I say, potentially, but that's been talked about a lot. Number four, UK to hold a referendum to back out of Brexit. Now, there has been talk about this because obviously, obviously there is wasn't it discussed a few months ago when you said it was in a technical recession and it wasn't, was sure months ago UK would end up with 22 and US 23. It seems inevitable. Yeah, the UK's on the, good question, and hello there. Yeah, the UK's on the brink of recession. Some say they're already there, but they're without a doubt in it. US, technical recession, they don't see it like that. They don't do it that way. But by 2023, it will definitely be most likely in a soft recession. They're hoping. So that's the overall consensus, but good question. So UK holds a referendum to back out of Brexit. Now, there's been a lot of talk about this because obviously the Brexit has had huge economic repercussions to the UK. So there is a lot of talk about whether or not the UK will hold a referendum Brexit. However, I don't think it's possible. I don't think it's likely. I don't think it's likely due to the fact that the vote has already been cast and it's a democracy. After all, you can't go back on a democratic vote, even though many see this as obviously negative repercussions on it. I really doubt that will happen. But of course, if that was to happen, that'd be a crazy black swan event, would cause an awful lot of volatility. The sterling in particular will certainly get a boost if they were to do that. It will be the currency to certainly watch if that was to happen. Number 5, again, there has been talk about this. Number 5, OPEC Plus and Chindia, or like the China-Indian sort of network, leaves the International Monetary Fund to create a new reserve asset. There has been talk in the past of China, India, and a number of emerging nations breaking away from obviously certain global bodies to form their own sort of, network, their own sort of trade pact and their thing. And obviously, because of the strength of the US dollar this year, and the US dollar is the world's biggest reserve currency, has caused a number of problems for a number of nations with imports, etc. So there has been talk about them doing it in the past, creating their own reserve asset to rival the dollar, to take away the dollar's dominance. But whether that will happen next year, it's a big if. But that has been talked about before. But again, like I say, if that was to happen, this would be a huge black swan event to really rock the market. But anyway, those are the 5 crazy, not so crazy, but black swan predictions by Saxo Bank for next year. Like I say, it's that time of year. Everybody will start doing it. I'll make sure on every program, I'll share the best with you, without a doubt. Anyway, let's have a quick look at the market, see what's going on. Today, as you can see, this is the euro dollar on a daily, fairly flat at the moment, which is understandable because the calendar is pretty light. Very little events or talk coming on. And I pretty much can see that happening for the rest of the week because next week is going to be massive. And I'll talk more about that in my afternoon program later. But as you can see, as it stands at the moment, the euro dollar is still trading above the 200-day moving average just on the daily. Currently trading at 1.04953. Like I say, the key area there for me is around about 1.04920, which is around the moving average. So still above the 200-day moving average, but just. If you look at it on a 30-minute, that's on a 30-minute straight. If you look at it on a daily, again, really that's on the short term, really sideways as we can see. On the longer term, on the daily, for me, again, 1.03882, but in the short term, realistically, we're testing that 200-day at the moment. So again, pretty sideways. If we look at the sterling, British pound, on the 30 minutes, just under the 200-day moving average. Key area for me still is 1.21092. But as you can see, really sideways again today. On a daily, though, it still is just above the 200-day moving average. So again, still slightly on the upside, but very, very much range bound today. Dollar yen, same story as well. Range bound today, because like I say, it's quite a day. Key area I'm keeping an eye on that 38.2 Fibonacci retracement ratio, which is just above, around about 130, 137 mark. That's what I'm watching on that. And of course, I'm going to have a quick look at gold. Obviously, very little movement and excitement on gold at the moment. Still still caught between those two levels. This 200-day moving average on the daily, giving a key area of potential support of $1,759.59, but capped at $1,803.50. That for me is a key area. If we can break that, then potentially, if we keep the bullish momentum, I do see 1,877 is the next key area. But like I say, I think as we become to the end of the year and beginning of next year, I really start to pay a lot more attention to yellow metal because I really think it will start getting its shine back in a big way. S&P 500 futures, again, pretty much finding a bit of support around the 3,913 points. which is the 50-day moving average on the daily. But more importantly, on the downside, it's trading under that 200-day moving average, indicating we got pretty much a bearish momentum in the market at the moment. But anywho, events to happen today, they're not massive. We've got obviously ECB President Christine Lagarde who's speaking around about 12 p.m. UTC. Be worth hearing what she has to say. Again, the anticipation of the ECB will raise 50 basic points in the next rate hike. Will she underline that? I think she will underline the fact that her fight against inflation, she's committed to it. So maybe a semi-hawkish speech, but I don't expect the market, unless she says anything real big surprises, I don't expect the market to really be caught off guard by what she says. As well as that, we have US initial claims today, the 1:30 p.m. UTC. Don't forget, I often talk about initial claims as a canary down the coal mine, the early warning signal. We're not really seeing an increase in initial claims, showing at the moment the US labor market is still pretty robust and strong. Expectations to pretty much be the same. 230,000 new initial claims, previous number 225. So nothing really dramatic, unless we get a shocking number, but I don't think we will. But again, like I say, that's at 1:30 p.m. UTC. So those are the events. The only thing else to come tomorrow is Michigan consumer sentiment, which we'll talk a little bit more about later. European equities, pretty flat, all in the red. FTSE currently negative 0.20%. DAX currently trading negative 0.11%. And Eurozone 50 currently trading negative 0.10%. Like I say, this week is going to be a pretty range band, unless we get any shockers in the market. If we do, of course, I will, of course, come straight on and I'll share it with you. But next week's going to be massive. I can just give you a little teaser now. US CPI, definitely do a watch along for that. And of course, the Fed interest rate decision, as well as UK CPI as well. But US CPI and Fed interest rate decision next week. Next week's going to be really, really potentially massive. So don't forget that. Anyway, don't forget you can ask me questions anytime you wish, or share me your opinions. Like I say, it's that time of year. Share your predictions with me. How crazy do you think 2023 would be? What do you think is going to catch us off guard next year, which we're not prepared for? Any sort of major black swan events? I mean, I think the major black swan event, one of the ones this year, which really sticks out for me, which was sort of predicted, but the predicted it was going to cause a problem. But I think the actual overall impact it made, or the size of the impact it made, was probably not predicted, and that was obviously the micro budget in the UK. Whoa, that was a major, again, sort of black swan event, definitely for the sterling. So that was big. I'm trying to think of anything major else as well. We've had lots of stories, obviously, lots of things this year. But going to share with me your crazy predictions. Feel free to do that. Don't forget, if you think of a question later or you have a prediction, put it in the comment section, either YouTube or Facebook. I will see them and I will reply to them next time I go live on air, which of course will be later today at 3 p.m. UTC, or between 3 p.m. and 3:30 p.m. UTC, to discuss the US session and what else is happening in the market. So feel free to join me for that. Okay, if there is no questions, not a problem. Not a problem. Don't forget, if you're watching me on Facebook and you enjoyed this little program or little video, by all means, give us a follow. If you're watching me on YouTube, you enjoyed this little video and you found it interesting and useful, subscribe if you like, hit the notification button. So you know next time I'm going live. If you enjoyed this video, find it interesting and sort of entertaining maybe, and you put up with me, my over-the-top enthusiasm for the markets, I simply cannot help. Then give me one of these. It's nice to know that you like what I do. Anywho, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.